All right, guys. So Corey Smith here, CoreFX, bringing you guys another webinar. Today's topic is market structure. I'm going to go ahead and focus specifically on charts in this. I'm not going through any slides. I'm not going through any scripts or anything like that. Anyone that's done my webinars or anything knows that I like kind of just going with it and covering these topics from a broad perspective and just showing you guys live hands-on feed of what I'm talking about with these subjects. Market structure is one of those things that is extremely important. A lot of people always ask me about it. Not as many people use it in the ways that they can. And it's just one of those extremely powerful tools that a lot of people overcomplicate. And it should be pretty simple. It should be pretty clear cut. There are some gray areas where things can be a little hard to comprehend, but other than that, it should be pretty simple, should be pretty easy to understand, and it's really going to help us out with identifying a lot of things in trading. What I'm going to try to do is simplify it for you guys today, show you how you can turn it into an actionable tool in your trading plan, something you can actually use and enforce into your plan, whether it be something as simple as determining the direction of the trend, or maybe it's the trigger to enter you into trades, or maybe it's your take profit cue or your stop loss target. Whatever it may be, essentially want to just help you guys understand what Forex market structure is and how you can use it in your trading. So, starting off with what really it is. As we know, the markets do seem random at times, but they actually do have a structure and a flow to them. The main two structures we want to worry about when we're talking about, the way the market moves is trending markets and non-trending markets, essentially. So I'm a trend trader, and most professional traders you'll find are trading against the trend is just statistically putting yourself at a disadvantage off the bat. Trading in the direction of the trend, you're putting the probability in your court off the bat. So you really want to be not looking for tops and bottoms, not looking for reversals, but more so looking for riding the trend. Now, there's times when there's good double bottoms, double tops, head and shoulders, triple bottoms, triple tops, all kinds of different reversal patterns that we can take advantage of and look for the early trend reversal moves and things of that nature. But all in all, we want to ideally look to follow the trend. And even if you're not looking to follow the trend, even if you're a range-bound trader or reversal trader, market structure is still something you want to understand and learn how to use. All right, so first of all, when we have a range-bound market, you have more so markets that look like this, right? So we've got price moving basically sideways, right? Price goes up, then it comes back down, then it goes back up, then it goes back down. And it's range bound between a range. We have support holding down here, we have resistance holding up here, and price is basically just bouncing between the two of them, right? So this is markets that a trend trader and myself personally don't want to be trading. I don't want to just try to catch this range bound move. A lot of these times these will break out and then come back into the range, or you'll hit the ceiling and they won't really move too well off of it. Following trends, for one, trends are more likely to continue than they are to reverse, but also you get a lot stronger, more sustainable moves when you follow in the direction of the trend. So I'm biased in the sense that I trade trends, so that is why. But there are people that are range-bound traders that are successful at it. So I'm not taking anything away from them. I'm just sharing my personal approach and my ways of finding success. So this is how we use market structure to determine this is in a range-bound, just by seeing that price is bouncing around between highs and lows. I'm not going to focus on range-bound markets because that's not the point of market structure or this webinar. But this is what we want to be able to identify as a range, right? Price is bouncing between support and resistance. Now, what we want to look for is more so moves like this, right? Moves like this, or even moves like this, and especially moves like all in here, right? So these are the kind of moves we want to be looking for in trading, and we want to try to take advantage of downtrends, uptrends, whatever trends they are, but we want strong trends. That's what we want to be looking to trade, and that's what we want to be looking to take advantage of, because that is how we ultimately can ride the momentum and ride the strong moves of a trend, and also be on the right side of probability and having the trend continuation be in your favor, right? So now, simplifying market structure. basically what market structure is the way price moves, the pivot points and the swing points price makes, right? So we have a swing high here, a swing low, swing high, swing low, right? And as we're seeing these swing points, what is price doing? It's moving lower, right? So from this swing to this swing, price moved lower, right? From here to here, price moved lower. Then we had a pullback, then price moved lower again. Then we had a pullback, then price moved lower again. Pull back, price moved lower again, right? So this is what we would consider to be a downtrend. This is when we see price moving, making lower lows and lower highs, right? Price is setting new lows, pulling back, setting lower highs, setting new lows, lower highs, new lows, right? So this is what we consider a downtrend. And this market structure is the market structure we see when we're in a downtrending market because, like I said, price is breaking into new lows and then pulling back and then breaking into new lows and then pulling back. So as you can see on this chart, price is moving from top left to bottom right. That is a downtrend. Now, if we go left, we can move to somewhere else. I want to find a more clear one. Here we go. Now, this is price in an uptrend, right? Price goes from bottom left to top right. So that is the overall direction the market's moving. And market structure is the flows it moves in that direction, right? So we have a push higher, a pullback, a push higher, a pullback, a push higher, a pullback, a push higher, a deep pullback, retesting, reversing, and then pushes higher. So essentially, we want to be really aware of what phase the market is in as we're trading. Because if we're trend traders and we have a chart where market's range bound, we probably are going to want to look for a different chart where there's a stronger trend. If we are in a downtrend, we want to know what point of the trend and the structure that price is in. Are we setting a lower low? Are we pulling back and setting a lower high? In an uptrend, are we retesting a higher high? Are we breaking through to make a new higher high? So wanting to know what phase we are in of market structure is going to help us with identifying when to enter the market, when to look for trades, when to expect breakouts, pullbacks, all of this to occur, right? So starting with this here, as we were saying, we have a lower low, pull back to a lower high, push lower low, pull back to lower high. Now, one question that I get all the time is, why is this considered a lower low? So price came down, made this low, right? So let's just say looking left. After this move, price pulled back, price pushed forward, and then price pulled all the way back and broke the last swing point, right? So we had 1, 2, 3 days pullback, pushed higher. This was our swing, and we broke. So just saying we made a new lower low. Price just reversed trends. We made a lower low in price. Now, what price does next is it pulls back off that lower low. Now it makes what we call a lower high. Now, why is this a lower high? Because this was the last swing high, right? Price was at a high point and then sold off. Price then made a lower low, pulled back to make a high point, and then sold off again. This high is lower than this high, so it's a lower high. Now price comes down. Our last lower low came down to here. What did price do? It broke the support, broke the structure of this past lower low, and now we have a new lower low, right? So this broke this lower low, moved down, broke below it, set a new lower low. Then what does price do? Pulls back up and then sells off again. Now what is this that we have made here when we make this swing point? This is a lower high. So we had the prior high here. Now we have a new high here. It's lower than that high. It's a lower high. And this continues onwards with this trend. We got a lower high here, lower low here. This was the old structure here that got broken. With this lower low here, this was the new structure. Got broken. Price came down, set another lower low. Now this is where you can say things get a little bit tricky in determining what is a pullback and what is a reversal. When it comes to market structure, there are a few different things that I use to determine this. For one, you can use trend lines, right? So in a downtrend, we're connecting the highs. And if this trend line gets broken, we could say it is reversing trend, potentially, right? So that could have been the trend line. We can use moving averages. I like using the 50 moving average for trend direction. It's more of a long-term average. Price breaking that, to me, is in question of breaking trend. So basically, after this lower low, we did get a pullback, right? So we got lower high, really formed here was the first lower high, right? So it came down, set a new lower low, price bounced off, set this lower high, made a lower low, pulled back, retested this lower high, retested this lower low, range bound in here, right? So between this support, this resistance, we were retesting the lower highs over and over, and then retesting the lower lows. And then what did price do? It came and broke structure, broke above this, and set what this is now a higher high, right? So this broke out of structure. Once it broke this lower high down here, this broke market structure. And now this is our structure that was broken to set a new higher high. Now what could have happened after that was price could have pulled back, set a higher low, pushed forward, set a new higher high. Then maybe we get pulled back for another higher low, push forward, get a new higher high, right? So at this point, we were in jeopardy of a trend change. We broke the 50 SMA, broke the trend line initially here, set a higher high, but then what did price do? It sold off, moved all the way down here, and set a lower low, right? So essentially what this is telling us in here is we don't want to be, when this is breaking structure and showing us that this is more than just a pullback and it could be a trend reversal, this is where we need confirmations and we need patience and we need multiple layers of our trading plan to give us signals to enter or exit trades, right? So when we have this pullback and we break structure, set a higher high, at this point, yes, it can be reversing trend, but do we want to just jump in long now because this reverse trend, or do we want to wait for a setup to show us what price is doing, what price is likely to do next, right? So we had this counter trend line from that pullback. This pullback formed somewhat of a flag pattern, right? A bear flag pattern. We're in a bearish downtrend, formed a flag pattern, and then broke out of it. And then now we came down here, set this lower low. And then what do we have happen here? Set a lower high, right? And the lower high was this area. The lower low was this area. And price ranged between the two, right? So this is where we wait for a breakout to the downside if we're trend traders. When we're in this bearish rectangle pattern. And then what does price do? Breaks out, sets a lower low. What's it do after that? Pulls back, sets a lower high. After that, it retests the lower low. So this would be a retest to this lower low. Didn't break below the lower low. It held. This came back up to retest the lower high. Didn't break above it to set a new higher high. Stayed within structure. And then boom, broke lower, set a lower low, right? Then price pulled back, set this lower high initially. This could have been an area where we saw price respect structure and roll over, but it didn't. Price then broke through structure, and now we are setting a higher high. See how that just happened there? Price made a lower low, pulled back. I use at least a 2 or 3 day candle pullback on the daily chart to consider it a swing point if it then has a candle reversing in the opposite direction, right? So it pulls back, then we get a bearish engulfing. It looks like price could be rolling over off structure, and it does the opposite and continues higher, breaks structure. Now again, just because it broke this structure initially here, that doesn't mean you have to go and buy. Doesn't mean the trend's over. It doesn't mean it's a reversal. Doesn't mean any of that. It means the trend, one layer of identifying a trend's phase is in jeopardy. Market structure. You still have the 50 SMAs above price. You still have the trend line that's price is trading below. So you really ultimately, market structure is extremely crucial, and we want it and need it to help us identify the points of a trend, but you can't rely too much on it, right? So it's great for knowing where we are in a trend. It's great for identifying trade setups. It's great for a lot of different factors of our analysis, but we don't want to only rely on any one thing ever in trading. We don't want to just trade a support and resistance level with nothing else lining up. We don't want to just trade a Fibonacci bounce with nothing else happening. We don't want to just trade a candlestick reversal, and we don't want to just trade market structure. What we want to do is line market structure up with as many other tools as we can. So how does this work? Look at this move here, for example. We were in this consolidation, right? In a downtrend, price is consolidating. That is what we want to look for, a breakout to continue the trend. Now, you could have either played this breakout here and shorted it, or you could wait for this lower low to be formed, price to pull back, set a lower high, and then short it, right? So what did this just allow us to do? It allowed us, for one, instead of getting in all the way down here and trying to trace price, it let us get in all the way up here at a better price. For two, looking left, you can see we're on structure. So this was support in the past. Price broke it, pulled back, and now retested this support as resistance. That is market structure at its finest, right? We have a lower low. Price ranges between the lower low, lower high. Boom, lower low set. Retest the lower high at the prior lower low. That is market structure, right? So we had a lower low. Now we got a lower high. And what is this? A retest of structure. The lower high is the same as the lower low. That is breaking out, pulling back to retest, and then pushing lower. That is picture perfect technical analysis right there, right? Now, don't get the terms confused. I do say retest of structure with this as well. Like, let's say this is a lower high. Price has retested structure when it comes back up here and bounces off the lower high, comes back up, bounces off the lower high. That's a retest of structure too. And they're both retests of structure. Retests of structure can have different, meanings and purposes. But all in all, retests of structure is a great trading opportunity for us. It's a great position to enter trades. So why would we like this lower high forming as a trade? For one, great position to identify stop losses, right? We can go above the swing high. Great for identifying take profits. We can use the prior lower low as our initial take profit. We can use maybe Fibonacci projection tools to try to identify another take profit if this sets a lower low. A number of different things, but it gives us confirmation, right? We have support, turn, resistance in a trend, retesting the trend. Gives us additional confirmation. Gives us a good, clear risk to reward. And it gives us a discounted price. Price already made a move and pulled back instead of chasing price as it's running away. Got us in at a good price, and it gave us an opportunity to ride the trend, ride the momentum of a trend in the direction that the trend's moving. So ideally, we want to use market structure to find those perfect setups. But there's a number of uses you can use for market structure, right? I like using market structure for trend determination. Now, you can use it on a number of different time frames. Market structure is fractal, just like most tools in technical analysis. What that means is you can use it on the 15-minute chart. You can use it on the hourly chart. You can use it on the 4-hour, daily, weekly, monthly. You can use it on all different charts, and it will look the same. It will yield the same, views. So here, we've got price makes a lower low, pulls back for a lower high, lower low, lower high, lower low. It's range bound in here, consolidation. Breaks out of what looks like it's going to be a new lower high, but then we come back to retest prior structure. Comes back down to retest the lower low, pulls back up for a lower high, and then boom, we got another lower low, right? So this is the weekly chart. We were just looking at the same kind of movements on the daily chart, and it's similar. It's fractal. We can go down to the hourly chart. Looking at the hourly chart, it's not going to be as clean as the daily, but the hourly chart is the same premise, right? So we set a lower low. Price pulled back for a lower high, retested lower low, somewhat retested the lower high, and then boom, we push lower. Now we come all the way down here before we have an actual pullback. Pulls back, sets a lower high, rolls over a bit, and then temporarily breaks the lower high, and comes back down and retests the lower low, range bound, stays in the range, lower low. Pulls back, lower high, doesn't quite go to lower low, retest lower high, boom, lower low, lower high, lower low. So you can use this across the time frames. You can use this, it's fractal. It's my personal use for it is mainly the daily chart. I like daily chart because you get clean structure on daily charts. A lot of eyes are on the daily chart. A lot of trading companies and traders and banks all watch the daily chart. It's a very popular time frame. And as we know, Forex is a very self-fulfilling prophecy type of market where the more eyes that are on things and reacting to them, the more likely price is to react to that. So we want to be watching what the most other people are watching. And daily chart is what I use mainly for market structure. I do like using breaks of market structure on the smaller time frames to give me entries to trades. So I look for pullbacks on the higher time frames, and then I use the lower time frames. Those pullbacks on the lower time frames are actually trends in the opposite direction because it's a much smaller zoomed in time frame. And then I wait for that trend in the opposite direction to reverse, which on the higher time frame is that trend now continuing after the pullback. So a little confusing, but there's many different uses to use market structure for. So you can use it for trend direction, right? You can use it to identify, okay, I'm only going to short in downtrends after a lower high. Okay, you may wait for lower lows to be formed, lower low, pulls back, and then price starts to roll over. This is your lower high. Maybe now, shorting opportunities, shorting opportunities, shorting opportunities, shorting opportunities, right? Maybe your strategy tells you that you want to wait for that. Or maybe your strategy tells you, I want to only look for breakouts to set new lower lows, right? So in a downtrend, I'm only looking for lower lows after breakouts. So let's say we're in this. Price comes down, sets this lower low. Now we're watching this lower low here for a breakout, and that's when our trade is triggered to go short. So maybe we get in here and we got short opportunity, short opportunity, short opportunity, short opportunity, and we catch those breakouts as price moves down, right? Maybe we have a strategy that calls for whatever you want to. Maybe you're a counter trend trader and you want to buy when you get a new lower lows formed and price is overextended. You want to buy when it hits a support and try to catch that push higher off of that oversold price and overextended price. There's a number of different ways you can use market structure. Just make sure you understand it and have a way to use it. You can use it as your stop loss placement, right? So you're in the same move, right? You're in this pullback. You look for this pullback to come to an end. You got these wicks here, rejecting 50 SMA. You get a big bearish engulfing. Maybe you're in somewhere in that candle. All right. Now, where do you want to get out? Well, you could use the prior swing high to be your stop. So you get in here, and if price comes up and breaks this structure, oh, well, that tells me my trade analysis was wrong. I want to be stopped out and move on to another trade, right? So maybe you want to use that as a, your stop loss. You could use it like I showed in the other example before as your take profit. Maybe, you trade pullbacks like I love doing, and you use the prior pivot point as your take profit. You get into this trade up here after this pullback, you short it, and then this is your first take profit down here at the prior lower low structure, right? Maybe that's how you want to use it. There's a number of different ways to use market structure. But all in all, we want to make sure we understand exactly how to use it. Now, as being a trend trader, this kind of market isn't really a market I want to be trading, right? A lot of this chart is just not a market I want to be trading. If we go left to back in time when price was here, now we're talking a market we want to trade, right? This is a market we want to trade. And there's all kinds of opportunities following this market structure. So, showing you guys real quick how market structure changes as we go. Let's do this here. So prices, let's start with this point in time, right? So price came down. This was the prior swing point. These were the prior swing points, right? So price broke structure when we came down here because we set a new lower low, right? Lower low set here. Broke structure, pull back, set a lower high here, broke lower, set a lower low here. Then what do? We pushed up and we broke that structure now. So what was, all right, come on here. Sorry guys. What was this lower low here, pulled back, what was the lower high, which was prior structure, got broken. And now what did this do? Set a higher high. So now, we got a higher high formed. Pulls back, sets a higher high, higher low, higher high. A little bit of choppy price action here, another higher high, and then it sells off, breaks structure. So now, at this point, we have a lower low. Then what does price do? Pulls back, sets a lower high, right? Then what does price do? Boom, sells off all the way down to, let's say, here's when it first finds major support, really. Lower low, here. Price bounces pretty strong off of that. Sets a lower high. So all in this time period now, as we're setting lower lows and lower highs, is a great opportunity to be shorting. We come down here, lower low. Sets a lower low. Pull back, sets a lower high. Comes down, sets a lower low. Pulls back, sets a lower high. Comes down, sets a lower low. Pulls back, retests the prior lower high. Pulls back all the way up to it, bounces off it. All the way up to it, bounces off it. All the way up to it, bounces, lower low. Boom. Pulls back, lower high. Boom. Comes down. This isn't a lower low. What is this? A retest of the prior low. So this is a double bottom, right? This is what we have as a double bottom. That is when market sets a lower low, comes down, retests it, fails to break below it, structure holds, boom, we reverse trend. Now what do we come and do? We set a higher high, right? Price sets a higher high. Pulls back, sets a higher low. We are now in an uptrend. Pushes higher, higher high, pulls back, higher low. Pushes higher, higher high, pulls back, higher low. Then what does it do? Sets a lower high here, and then a lower low. Now we're back in a downtrend. Lower high, lower low, lower high, and it continues to oscillate. You see how market moves in structures. It moves in formations. It moves in not perfect rhythm, but it moves in a rhythm. So what we want to do is get an idea of how this rhythm flows and how it works. And then what we want to start doing, once we have an idea of that, we start to catch on to market structure. That's when we can use chart patterns, right? So we have higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then boom. We have a pattern, right? Within market structure, higher high holds, higher low holds, 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 holds. Now we want to wait for a break of structure to trade a breakout of this pattern. What does it do? Comes up, retests again, boom, break structure. Now that wouldn't have been a nice trade, but that is a perfect example of how you can use market structure now pinned up with consolidation patterns. You can use market structure. You have to use market structure with support and resistance, right? So we want to be trying to identify these together. So we have this area of support here. Boom, it acted as the lower low here. Pulled back, lower low is retested. Boom, it's broken. Lower low. Now pulls back, lower high. Pushes lower again. So now is when we want to start identifying market structure, identifying how to see what phase price is in, what stage of a trend price is in, and then we want to begin applying our other tools, our other analysis to them, right? We want to look for maybe your strategy includes market structure in something as simple as after a lower low is formed, I then wait for a few day pullback to then look for shorts off of Fibonacci level, resistance, whatever. But all in all, market structure has a number of different tools that can help us. And I mainly want to get through to you guys to use the simple aspect of using it as a trend tool, using it as identifying what phase of a trend we are and knowing, okay, if all we see on the chart is right up to here, price is on the move, right? Price is breaking lower and just falling. There's no areas here that's showing us, okay, market structures at this point, so we want to be looking to buy. No. We want to wait for price to do something like this. Okay, hit a bottom. Now it pulled back. Now maybe after this downtrend move, we want to look for a lower high. What do we get? Oh, a bearish engulfing candle there. Okay, so boom, price sold off. Now set a lower low, right? And then if we're at this point here, we can see, okay, price just made a lower low. Now we know that's the phase of the trend that we're in right now. Price just set a lower low, right? So switching over to other charts real quick. Let's see euro dollar. Okay, so what I saw was price is here, and we were in an uptrend, right? We set a higher high, pulled back, higher low, higher high, higher low, range bound in here, boom, broke structure, lower low, lower high, lower low, lower high, retested lower low, didn't quite break out or test the lower high. So we are now in a downtrend in a consolidation pattern, right? So price is trading between a resistance and a support. Then what did we get here? boom, lower low was formed. Price pulled back. This was a good opportunity to look for potential shorts off a retest of structure. This could be a lower high, but it didn't happen. It blew right through that. And now we're just back into this range, right? So we did set a higher high after this break, if you consider, rolling over here a little bit. But all in all, what I would consider this is this structure still holding, right? So this structure is holding on the bottom. This structure is holding on the top. Essentially, what I see this as is still in a downtrend, but reversing it now. Starting to reverse it. And if I want to look for a reversal to this trend, I want to look for this to confirm to me that it's reversing its broken structure. And then maybe we wait for it to pull back and retest that structure to catch that next move like that, right? The other way you could play that is if you waited for then price to come down, I would wait. You could wait for this break of structure here, right? Because this is a little bit of a higher low. You could wait for it to break that, set a lower low off that, pull back. Or what you could wait to be, extra cautious, which would take a while, but you could wait for price to come down here, make its way down, and break this lower low and pull back. Set a new lower low below this structure, and then try to get the next pullback off of that. Right? So really just start using this to identify what phase charts are at. Taking it to the pound dollar. As you guys can see, we were in a downtrend, right? Lower lows. Lower low, lower high, lower low, lower high, lower low. Retest, lower low, lower high, lower low, lower high. Now we've broken structure, higher high, higher low, higher high. Now, that being said, this is a higher high. What do I want to be looking for as a trader after this has happened, right? So we have trend lines broken. We got this trend line's broken. We got this trend line's broken, right? We got a number of trend lines broken. We've got 50 SMA broken in here. We've got the 50 crossing the 20 SMA in there. So we have a number of trend changing confirmations happening. So now what is our next phase? What do we want to anticipate and prepare for? We want to now anticipate a higher low forming. Then maybe we look for buy opportunities to catch that next higher high. Or maybe we want to look for a breakout of this higher high and trade a breakout trade in this as it's breaking out of this higher high. All in all, we want to start identifying where these trends are at, what phase we are in, and use that to build into our trading plan. Maybe you only look for trades that have just made a new lower low and is pulling back off of it. Or maybe you want to look for only trades that made a new new higher high and pulled back off it. Or maybe you're only looking for trades that are retesting lower lows because you want to catch that breakout. Reiterating the same stuff, all in all, you want to make sure that you are identifying where price is in these phases of trends and use that to build into your plan more rules that you can follow. Everything in trading needs to be rule-based. You need to eliminate your emotions and eliminate human error as much as you can by having an exact plan with an exact strategy that tells you exactly what to do at any moment of any trade. You should be able to hand your trading strategy written down. It should be written down, and you should be able to hand it to somebody else and say, look, trade this exact plan. And they should be able to. Now, it does not mean they'll be able to succeed with it because everybody's wired so differently, but they should understand at least the exact rules laid out. It should be very rule-based. And one of the things you can help determine your rules is market structure. I love using market structure to determine when I want to be looking for a certain direction of trades. I want to be looking for long trades only when market structure just set a higher low in an uptrend. I want to be looking for short trades only when market structure just set a lower high in a downtrend. Things of this nature are ideally what you want to use it for. There are a number of uses for it, but just make sure you know what it is, you have a grasp of it, and you can incorporate it into your trading because it is one of those concepts that is crucial, and you will start to see the market so much more clearly once you start looking at it this way and understanding it this way. All right, guys, so that'll do it for market structure. Sorry about the sound of this video and all. I'm extremely sick, so wasn't too easy to talk this long straight, but I hope you guys got something out of it. I hope you understand a little bit more of what market structure is and how to use it, and I hope you guys enjoyed this video. I'll catch you all in the next one.